Ladies and gentlemen, my name is Steve Meredith, and I am the manager of commercial lending here at SPC. Today's webinar is titled An Overview of Commercial Lending at SPC, an overview of our loan products, interest rates, terms, and application process. Before we get into the meat of the presentation, though, I wanted to talk to you a little bit about what SPC is as an organization. We are a regional planning agency, we're a metropolitan planning organization, we're a local development district, and we are a core funded partner and fiscal agent for the Commonwealth's Partnership for Regional Economic Performance program. That's a lot of alphabet soup. However, from an economic development perspective, we are here to help small businesses in the region start, grow, and prosper. So where does our loan program come into that sort of end of things? Well, we provide low interest financing for land or building acquisitions, construction and renovation, machinery or equipment purchases, business acquisitions, and working capital to businesses that are unable to fully finance projects. Now, I do want to qualify a couple of the bullets on this slide. First, from machinery and equipment purchases, we finance machinery that is essentially stationary, so non-rolling stock. What that basically means is if your equipment that you need to purchase goes over the road, like a trailer or a car or a truck, something like that, we are not able to finance that just because we cannot take the title to a vehicle as collateral. But if you are going to be using a relatively stationary piece of equipment or a piece of equipment on a specific project site, we can help finance those kinds of equipment purchases. And then the other thing I wanted to qualify was the working capital to businesses unable to fully finance projects. We have two different working capital types of loans. Our traditional type of working capital has to be related to a larger building or equipment purchase. So to give you a good example, if you own a print shop and you decide that, let's say for the last 10 years you've been printing stationery and business cards and all manner of paper products, and then one day you decide that you want to move into printing hats and t-shirts and screen printing and things like that. You're going to need a piece of equipment to facilitate that new product line, and you can take a loan from SPC to purchase that new piece of equipment, and then you take working capital from SPC to help train your staff on how to use that piece of equipment. So in that instance, the working capital is related to the larger equipment purchase. The second type of working capital that we offer is actually with our CARES Act, our COVID-19 Working Capital Access, or excuse me, our COVID-19 Recovery Loan Fund. That working capital is designed for any business that is experiencing supply chain delays or workforce shortages as a result of the COVID-19 pandemic. And you can use that kind of money to pay for payroll, rent, mortgage, utilities, or inventory purchases. And I'll get into that a little bit later into the presentation. But I just wanted to sort of give an overview of that type of working capital program as well. This slide actually, the next few slides blend together quite well. The reason why people come to us in the first place is because of our low fixed interest rates. We can be up to 4 points below prime with our interest rate. Right now, prime is at 7.75%, I believe, and we are 75% of that. So our interest rate right now is at about 5.8%. And the nice thing is that our interest rate in almost all circumstances is fixed for the life of the loan. And when we're talking about the life of the loan, we're talking for a land or building loan, we can offer up to a 15-year term. Machinery or equipment loan, we can offer a 7 to 10-year term. And for a working capital loan, we can offer a 1 to a 5-year term. Now this slide blends together quite nicely with the next slide because our loan terms and our regulations depend upon a couple of items. Okay, so one of our loan program requirements requires that we have matching financing from the private sector or through equity, and it's typically a combination of the two. We typically ask our borrowers to bring 10% equity to the deal, and then the remaining 90% is split between SPC and a private bank. Essentially, what you end up getting is two separate loans. one from SPC and then one from the private bank. The SPC loan carries that favorable low interest rate that's locked in for the life of the loan. So over the loan's term, you end up saving money in interest. We also require, collateral. So typically, when we give a loan to one of our clients, the asset that is being financed is offered as collateral. So if we are going to be helping finance a building, we're going to take a mortgage on that building. If we're going to be financing a piece of equipment, we'll take a lien on that piece of equipment. But in addition to the collateral offered, we also require personal and corporate guarantees required from any business owner with 20% or larger stake in the business. And there are very rare exceptions made to this personal guarantee requirement. The other thing I wanted to mention before I move on to the fourth bullet, from the collateral perspective, from the asset that is being offered, one of the reasons that we're so attractive to work with from a banking perspective is when we go to the bank and we say, okay, we have this potential deal, we need some private financing from your side, can you help us out? One of the reasons that banks like to work with us so much is because we have the ability to subordinate our lien behind the bank's lien. So sometimes the bank will say, okay, we'll work with you, but we want first priority lien on the mortgage that we are going to be taking, on the building that we're going to be helping finance, or we want first lien on the piece of equipment that we're going to be helping finance. That's okay with us as long as we can stay below certain loan to value thresholds. We can take a second lien position on the building that's being financed or on the piece of equipment that's being financed. That's just a brief aside. The last requirement that we have is an economic development component, and it very simply states that every client that takes a loan with us must agree to either create or retain one job for every $75,000 borrowed, okay? And you must fulfill that requirement within the first 3 years following the disbursement of the loan proceeds. So it doesn't matter how long your loan term is, you have to meet that economic development component by the end of the first 3 years following the disbursement of the loan proceeds. Now, a lot of times people ask me, well, do you prefer to have job creation? Do you prefer to have job retention? And really, that we offer some flexibility with this requirement, okay? Let's say, for the sake of argument, you are an existing business that's been in business for 10 or 20 years, and you want to purchase a new piece of equipment to replace an aging piece of equipment. It's a very common thing that we see all the time. But the problem is that you're not going to be creating any jobs with this project. But where you can use the retention requirement is if you would otherwise lose 4 jobs if you just got rid of that old piece of equipment and didn't replace it, if you're going to be retaining those jobs by purchasing the new piece of equipment to replace the old one, that's where the job retention requirement comes in. And you can say, oh, we'll retain this many jobs, and then we'll create 0 jobs, or we'll create 0 jobs, but we'll retain 7 jobs or 8 jobs. Just be very conservative in the number of jobs that you say you're either going to create or retain, because the only instance where your interest rate could rise is if you fail to meet the economic development component. If you fail to meet the economic development component on a loan that you take that's backed by the state of the Commonwealth of Pennsylvania, the Commonwealth of Pennsylvania could then come to you and say, okay, well, you failed to retain or create the jobs that you said that you would by the end of 3 years. So that's when the interest rate could rise. In most cases, however, our clients do not have a problem with this. Most of the clients are very conservative with their job creation or retention metric that they say they're going to either create or retain. And in 99.9% of all cases, they end up having that low interest rate fixed for the life of the loan. But I just wanted to make that clear for anybody that was listening. Okay, application requirements. SPC provides the loan application, and you've got to complete all the applicable sections. Now, the nice thing is, if you are taking a loan that is funded with our internal revolving loan funds, we have taken that application and then we have put that 100% online. Okay, so if you qualify for a certain loan amount that we have in our internal revolving loan funds, you could potentially complete the entire loan application process online. Now, in addition to the loan application, we're going to need 3 years worth of company financial statements, 3 years worth of business and personal federal tax returns. The personal federal tax returns have to come from any guarantor, anybody with 20% or larger stake in the business. We'll need commitment letters from all other funding sources. So the bank that provides the matching financing must also provide a commitment letter for their match. From an underwriting perspective, we need a sufficient cash flow to meet the debt service. And then in some cases, we may ask the guarantor to take key person life insurance. This happens whenever there might be a guarantor that has been with the business for quite some time. Maybe they're approaching retirement age, or maybe they don't have a succession plan in place. That's when we might take a key person life insurance policy, but we only collect on that key person life insurance policy in the event of that key person's death. Now, for those of you on the webinar today that might be newer entrepreneurs, maybe you are trying to fund a startup, or maybe your business hasn't been in business for 3 years yet. In place of the 3 years worth of company financials and the 3 years worth of business taxes, we will accept a fully formed business plan and 3 years worth of business projections. Okay, but we do ask that that business plan and those projections be reviewed by a small business development center. We have 4 of them in the southwestern Pennsylvania area, and I'm happy to connect you with any one of them if you need help connecting with them. So, loan application process, how does it work? First things first, every single loan that we do starts with a pre-application discussion with the borrower. That's where I determine whether or not you're a good fit for our program, whether you can meet some of our requirements, like the jobs requirement, like the 10% equity requirement, etc., things like that. After that discussion, what we will do, I will either call up your business bank, or I will call up one of the banks that we work with on a regular basis. It's up to you whether we want to go through your business bank or one of the banks that we work with. And I'll basically say, okay, here, I've got a potential deal here. The total project cost is X. So after the borrower's 10% equity injection, we would be splitting X amount of dollars, resulting in, a loan for this much money. Do you want to participate? And, assuming the bank comes back to us and says, yes, we do want to participate, we will have a 3-way call with the borrower. And we'll say, okay, here's how the loan's going to get structured. Here's the collateral requirements for the bank. Here's the collateral requirements for SPC. And after that phone call, I will send either an invite to apply for our internal revolving loan funds through our online loan application portal, or if it's going to be a state-backed loan through the Pennsylvania Industrial Development Authority, I will send you one of their paper applications. We don't control the state's application. The state controls that application, so that's why that's still in paper format. But I'll send you either one of those applications. Then, once we receive the application along with all of the supplemental documentation, we send the package down to our commercial loan analyst. His name is Todd Stranko. Does a great job at what he does, but he's going to underwrite the loan. And he may come back to you with some clarifying questions. He might take a look at the tax returns and say, hey, I noticed you claimed such and such in profits this year. What's that from? Or what have you. It's a very common occurrence. He's a nice guy. He's not going to grill you too hard. So just be expecting that kind of a call from our loan analyst. After our loan analyst underwrites the loan, we present the loan to the appropriate review committees for approval. The way our loan review committee actions work is we have one loan review committee meeting a month, okay? And that usually happens on the Wednesday prior to the final Monday of the month. It's typically the 3rd Wednesday of the month, but some months it's the 2nd to last Wednesday of the month, depending on how the days hit, okay? Assuming our loan review committee meets and approves your loan, the following Monday, our executive committee would need to meet to ratify that loan review committee approval. Okay, but once those 2 approvals are taken care of, in most cases, the next step is that closing occurs with our commercial loan servicer. There's some pre-closing work that needs to happen. So for instance, we'll need to ask you for insurance information. We'll need the insurance policy in some cases to name SPC as a lender loss payee. We'll need things like your business formation documents, your any operating agreement that you might have, things of that such nature. But once all of those pre-closing documents are taken care of, we will schedule the closing and we'll get all of the documents signed, sealed, and delivered, and then we'll start dispersing your loan funds. Applicable fees. There are a couple of fees applicable to our loans. The first is a commitment fee. That is 1% of the SPC loan amount. That is due at the time that you sign and return the commitment letter. We have an annual servicing fee that is due on the anniversary of your loan closing date. That is equivalent to half of 1% of the outstanding principal. So if you think about it as you pay your loan down, that annual servicing fee will go down. And once you get your outstanding principal balance down below $50,000, that annual servicing fee becomes a $250 fee, flat fee, that is due on the anniversary of your closing every year until you pay the loan off. We also have no prepayment penalty. So if you have a couple of good quarters, or if you have a good 3 or 4 quarters, maybe a good year, and you want to pay that loan to get it off your books, please feel free to reach out to us. We can get you a payoff figure and you can pay that loan off for us. And then finally, the legal fees are the responsibility of the borrower for the preparation of the closing documents, UCC filings, etc. This third bullet I really want to highlight because we have taken steps to try to cut into these fees as much as possible and make our loan program as affordable as possible. If you are taking a loan that is funded by one of our internal revolving loan funds, we asked our counsel to give us loan template closing documents to use for those, specifically for those types of loans. So we now prepare the loan closing documents for our internal revolving loan fund loans in-house, okay? What that means for you is the only legal fees that you will be responsible for paying are legal fees associated with UCC filings and filings of mortgages, okay? UCC filing fee in Pennsylvania, I believe, is about $84, and the mortgage filing fee varies from county to county, but it's like a couple $100. So what we were trying to do was really cut into those legal fees so that you didn't have to pay, $3,000 or $4,000 just to prepare closing documents. The only time that you would have to pay for the preparation of closing documents is if you were taking a loan that was backed by the Commonwealth of Pennsylvania through the Pennsylvania Industrial Development Authority. And those are specifically, we usually try to reserve those kind of loans for larger dollar projects. So if you have a $4 million project, total project cost, and after your equity injection, we're going to be looking at an SPC loan amount of, $400,000, $500,000, $600,000, maybe over $1 million. That's going to be a state-backed loan, and we're going to have to utilize our counsel to come up with those loan documents, just because we want to fall in line with the state's loan program and things of that such nature, and that's not something that is easily done with template closing documents. It's a little easier to fall in line with our federal revolving loan fund loans using those template closing documents because we sent everything to our counsel at the beginning to say, okay, here are all the rules and the regulations for our revolving loan funds. Can you draw up some closing documents that fall in line with those regulations so that we can use them as templates? Okay. So now I want to talk a little bit about our COVID-19 recovery loan program, okay? This is our CARES Act loan fund, okay? It was funded by the Coronavirus Aid, Relief, and Economic Security Act. This is for businesses that are specifically dealing with supply chain delays, workforce shortages, things that have been sort of lingering since the COVID-19 pandemic started. These are for eligible businesses that have 50 employees or less. The borrowers can apply for up to a $150,000 loan. The proceeds can be used to pay for payroll, rent, mortgage, utilities, inventory purchases, things like that. Now, we do have 50% matching financing required through a combination of owner equity and private bank financing. So again, we're taking a look at that structure of 10% from the borrower, 90%, 45% from SPC, 45% from the bank. So 45, 45, 10, okay? The interest rate will be set no lower than 4 points below prime. Right now, we are 75% of prime, which means prime's at 7.75%. We are at 5.8%. And that really only fluctuates if prime changes, okay? It is a 5-year term, and we have a flat $250 fee at the time the borrower submits their application. One last bullet that I wanted to highlight: we can now use the CARES Act funding to pay for building, land, machinery, or equipment purchases. Now, the reason why we did this was because we are slowly, and I think in a good sense, seeing less and less of a need for COVID-19 recovery-related working capital. I think that's a good thing. I think that means that the COVID-19 pandemic is, from a business perspective, receding. You know, the effects of that are receding. Businesses are starting to see the return to pre-COVID revenues, things of that such nature. So what we wanted to do was still be able to use this fund to help our small businesses. That's why we went to our regulators and we asked, can we now use the CARES Act funding to pay for building, land, machinery, and equipment? And our regulators very kindly said, yes, you may do that. So that's why we decided to do that as well. So there's a whole plethora of reasons that you can use the CARES Act fund. If you have a potential project that might be good for it, please feel free to reach out to me. My contact information is right on the next slide here, and I'll turn on my video so that you can see my smiling face. As you can see, well, I don't know if you can see my background. I'm working from home right now. The Southwestern Pennsylvania Commission is in the middle of an office move, and we are currently waiting for our office build out to be completed. It is going to be a very nice office when it is completed, but we anticipate the completion of that construction to happen sometime a little bit later in the spring. So we will certainly let you know when we have moved into our new location. It's going to be in the Strip District. We're very much looking forward to it, but it's not quite done yet. We're still waiting for a few things from a construction perspective to finish up. So the best way to get a hold of me while I'm working from home at this point is via email, smerritt@spcregion.org. I also want to plug our loan application portal. I talked about it a little bit earlier in the presentation. This is a relatively new asset that we have at SPC. Back in 2021, we worked pretty hard to put our revolving loan fund application online. But in addition to the online loan application, this link that you go to, if you go to spcregion.portful.com/workflow, if you sign up for a free account, you can go through what's known as our pre-application questionnaire. And what that's going to do is that's going to ask you some questions about your business. It's going to ask you some questions about your project. And if after you fill out the pre-application questionnaire, if it appears that you qualify for SPC's financing, I will get an automated email saying that you have submitted your pre-application questionnaire, and I will reach out to you within 72 hours to discuss your project. Okay? And then from there, you know, once we have that initial discussion, we can get the ball rolling with the private bank. I can send you the online loan application if that's what you qualify for. If it's a larger loan project, we might have to make it a state-backed loan. But you know, all of those kinds of conversations can be triggered by you filling out one of our online loan pre-application questionnaires. And then finally, anybody that attends one of these webinars, I always invite to connect with me on LinkedIn. I love talking to new business owners or new business assistance organizations via that social media and facilitating conversation that way. So what I'm going to do right now is, if anybody has any questions that they would like to ask live, please feel free to either put them in the chat box, or if you'd like to unmute yourself, you can go ahead and do that as well.